Hey, what's going on, guys? Benny Childs, founder of the Teach Me to Fish Effects training community, and I'm back with another educational and inspirational video. Guys, in this video, I want to talk to you guys about how you can make money when the stock market is crashing. How can you profit in a bearish stock market? Now, I'm going to be very quick because I know you guys want the information and you want to go ahead and apply it. So, there are instruments called inverse ETFs. Okay, and with the inverse ETFs, when the stock market goes down, these ETFs go up. Okay, and there are three that I want to point out to you. All right, very simply put, the very first one is SH. Okay, the SH is the Pro Share Short S&P 500. Now, with this ETF, you get a negative 1x daily return of the S&P 500. What does that mean? When the S&P 500 goes down 1 point, you make a point. For example, when the S&P 500 goes down $1, you will make $1. Now, on the flip side, when the S&P 500 goes up 1 point, you lose a point. When the S&P 500 goes up $1, you lose $1. All right. Now, these are inverse ETFs. How do you use inverse ETFs? My recommendation is not to keep these inside of your long-term portfolio. All right. These are instruments that, while the stock market is on a bearish run, while the stock market is crashing, while the stock market is correcting, while the institutions and the big players are taking profit, you want to then take these inverse ETFs and place them inside of your long-term portfolio. Option number one. Option number two is, if you have a broker that will allow you to, you can day trade these ETFs for a short-term profit. Third option, you can do option plays. All right, if you have a broker that will allow you to play options, quote unquote, play options or trade options with these instruments, that is how you want to use these. All right, the second, well, let's get back to this. This is the most popular inverse ETF, and the expense ratio is only 0.89%, not even 1%. All right, they're not even charging you a 1% fee for this. Now, this is the most popular, but it's not the most profitable. Let's take a look. The second one is the SDS. This is the Pro Shares Ultra Short S&P 500. Now, with this particular inverse ETF, you get a negative 2x daily return of the S&P 500. What does that mean? Whenever the S&P 500 goes down 1 point, you make 2 points. Whenever the S&P 500 goes down $1, you make $2. This inverse ETF is has only an expense ratio of 0.9%. Again, not even 1%, and you can 2x. All right, you can 2x your profit whenever the S&P 500 goes down. Now, this still is not the most profitable ETF that I recommend to you. Thirdly, and the last ETF I want to recommend to you that is the most profitable that I love to trade is the SPXU. This is the Pro Shares Ultra Pro Short S&P 500. And guys, yes, you see it correctly. You get a negative 3x daily return of the S&P 500 with this inverse ETF. So when the S&P 500 goes down 1 point, you make 3 points. When it goes down $1, you make $3. And this ETF only has an expense ratio of 0.91%. Again, not even a 1% fee for this ETF. Let's take a quick look here, guys. We're here on the 4-hour chart. Take a quick look. If we come here at this most recent leg for the S&P 500, it's been going down. Right here, let's use a channel here. Maybe you guys can see this a little better. So if we come here, the S&P 500, okay, on this leg here has been going down. Okay, it's been trending down. Let's take a look at the SH. The most recent leg on the SH has been doing what, guys? It has been going up. Uptrend. Again, you see that? The S&P 500 has been going down. SH has been going up. You could have been 1xing, making a 1x profit while the stock market has been going down. Same thing with the SDS. It has been trending up while the SPX, or the S&P 500, has been trending down. And you could have been what? 2xing your profit. SPXU, again, guys, these are inverse ETFs. You see the pattern by now, but I want you to visually see this. It has been going up while the S&P 500 has been going down. Okay, again, guys, how do you want to, on the surface level, how do you want to trade these? Again, you don't want to keep them inside of your long-term portfolio, right, while the stock market is going up. But while the stock market is going down, you then want to either place them inside of your long-term portfolio, all right, if you don't want to deal with the whole day trading and options, all right. For short-term profits, if you don't mind day trading and trading options, then you want to make sure your broker will allow you to day trade or trade options with these. Okay, so these are the 3 inverse ETFs that I recommend that you guys take a look at and to further educate yourself. If you would like a more detailed view of the trading strategy that I use exactly and specifically for these inverse ETFs to help me to, if not profit, but to even hedge against my long-term portfolio while the S&P 500 is going down, and it helps me to break even, if not make a little bit of a profit, then I would suggest that you sign up for the mentorship program. But if this video has been helpful for you, I do ask that you like, comment, and subscribe. As always, please remember, if you stay in God, you will stay in control. And until next time, happy pip fishing. Bye-bye.